Hi everybody, Alex here from Expert Forex, and in this video we're going to be looking at how to find good day trading settings without optimization. And furthermore, I've recently completed one of the steps towards proprietary trading by passing all the requirements in a trading evaluation, and I'm going to show you how I went about finding these settings. This has been my first attempt at doing something like that, so I'm quite pleased. And this chart shows the trading that took place to reach my goal, and as you can see, it was on the FTMO platform itself, and I completed this using the Make Money Day Trader beta version that was available a while ago. This trading also took place on a total set and forget basis, so I did not interfere in this trading whatsoever during this process. So you have to find settings that will have small losses in bad days but huge gains in good days. And in this particular trading, you can see I had a daily goal of $320, whereas the daily loss goal was $120. Part of the reason for the success. Now, optimization generally finds the settings that worked best in the past, but there are severe limitations on those, and sometimes optimized settings are not practical or do not reproduce very well. So I'm going to show you potential ways of finding settings without optimization that might be a lot more robust. So in the last 2 weeks, we've launched 2 fantastic day trading robots. And the difference between these robots is that it is day trading. So in other words, you almost end all your trading at the end of the day. You close all your deals and you move into the next day with a clean slate. That's really what day trading is all about, and that's quite a dramatic move away in terms of our robots, because previously our robots were set and forget traders that traded over months to produce results. Now you can see your results day by day, and that is really more in line with traditional manual trading and the way traders like to trade. If you do not own these 2 great traders, there are links to them, and I would strongly suggest that you invest in one of those day traders. Now, day trading has also opened a fantastic opportunity for the man in the street to become a professional trader. And that means trading other people's money, because there's 2 aspects to trading. Sometimes you have a very skilled trader that has no money and really progresses very slowly. This gives those skilled traders the ability to trade vast amounts of money. But there's a little hidden thing in there, in that risk control is the key thing to a professional trader. Imagine yourself trading for 2 to 3 years without a drawdown of 5 to 10%. Professional trading is not so much about generating those fantastic gains. It's about never having drawdowns that are so big that they threaten the balance on your account. So that is what professional trading is all about. It's about risk control, and these day traders give you the tools to apply really good risk control. Now, this video is part of the Becoming a Professional Trader series that will be available on our paid forum in the next week or so. The first video was how to test $1 million settings, and in this video I showed how to set up a whole lot of trading platforms to test settings that you can use for professional trading. This video is about where you find those settings. And believe me, you will never become a professional trader if you are using set files that are provided by a third party. You have to be the one that creates the set file, understands it 100%, and owns it 100%. So forget about fantastic returns on a long-term basis by using somebody else's set files. Okay, so what we're going to do now is just look at the general setting strategy options that are open to day trading traders. And it'll make a lot more sense as I go through this. And I must just warn you, a lot of these concepts will be new to you, and you might have to watch this video a number of times until it starts making complete sense to you. So when you're day trading, there are two options in terms of direction. You can either reverse the trading logic, or you can use the same direction. Now that might sound crazy, but the same currency on the same day could respond much better to a reversal strategy in particular hours of the day, and it could respond much better to a same direction strategy later on in the day. Volatility plays quite a big role. So direction is one of the elements that has to make up your setting strategy. Next, you have to decide on the sensitivity of your settings. You either want to see very quick signals, which means they are fast settings, they provide signals very quickly, or you want slow settings which provide the bigger settings, the with the trend type of settings, and you need to decide what kind of strategies you want to use. Now the yellow that I've colored in here are my favorites. So I've already eliminated a lot of elements of strategies because I like the same direction. I like fast settings. So I've eliminated a lot of the choices, but it doesn't mean that I'm right. You need to work through these choices yourself, and these are areas that you can vary your strategies on. So the next one is return on risk, and that's quite a simple one. Do you want your targets to be bigger than your stops? Do you want your stops to be bigger than your targets, or do you want them to be more or less the same? Now that makes a big difference, because if you're risking 30 to make 60, your return on your risk is much higher, and it stacks the odds in your favor. But in certain cases, the reverse works better, or a balanced strategy works better. But those are the basic return on risk decisions that one has to make. Then the day trading management strategies. Now, when you start a day, you have to set limits on your account. In other words, if my gains reach a certain target, I want to stop trading for the day and take a break. Or if my losses become so big and they hit my loss target, I want to stop trading and go on to the next day. So that's a very important risk management tool for day traders, and it's very important to stick to that discipline. And again, you've got a choice here. Do you want to have your targets for the day much bigger than your loss targets, or do you want the opposite? Do you want the loss targets to be bigger than the gain targets? Now I like my gain targets to be roughly twice my loss targets, and that again stacks the odds in your favor, because on a good day you're making double the amount of money than you lose on a bad day. So again, you're stacking the odds in your favor. Then one quite almost related to the direction one is, what time of day are you going to use in your strategy? And that will basically be determined by the volatility of the currency that you're trading. Some currencies have high volatility times 3 times a day. Others have it only 1 time a day. And it depends on whether you're using a reversal strategy or a with the trend strategy, whether your selection will be for high volatility or low volatility periods. Again, you can see I like the high volatility, and why I like high volatility is that you only make money when the price moves. So I don't like trading in low volatility. The price is just going to lie there and do nothing. You're not going to make it, it'll never hit your target. So I like high volatility times. Then this is almost related to the volatility aspect, but there are trading volumes. In other words, when do the investors and the really big players enter the market? Do you want to trade when they are in the market, or do you want to trade when they are out of the market? So you will see that most charts give you volume readings. Do you want to trade when the big boys are there, or do you want to trade when the big boys are sleeping? Then the next one is position sizing. Now, position sizing is the most difficult setting for a professional trader, because position sizing balances all the above settings. and sometimes you only find it by trial and error. If you get your position sizing too large, you're going to hit your daily stops too often, and if your position sizing is too low, you might never reach the targets. So it's a very tricky one here, and a lot of traders find that by trial and error. I'm going to give you some pointers on how you can get close to that particular level, but it does take a bit of testing to get that balance correct, because it affects all the other decisions before then. Now, just to remind you that the priority of day trading is more risk management, and it is based on stacking the odds in your favor. Don't expect to have 100% success rates with day trading. But all we want to do is we want to stack the odds in our favor, and the idea is that when you have a failure, limit your risk. When you have success, maximize. Okay, so let's go into the process of the topic of this video, and what we're going to be doing is we're going to look at the charts for repeating price action. Now, this is not going to be that difficult. I'll show you how to do that, but we're going to actually look at the chart and say, hang on, I want to trade when this is happening. I want to trade when that is happening. So the first point you do is you look at the chart and say, if I were a day trader, when would I like to trade this currency? And this will help us identify the times when price action takes place, because we're going to be using an automated robot to trade the day. So we have to tell the robot, trade during these times. Then we're going to create settings that take the above information into account. In other words, if we've identified a pattern that is a trending pattern, we're going to take that into account in our settings. We're going to be trading with the trend. We're going to be trading targets that are bigger than stops, and all those kind of things we'll take into account. Then we're going to create day trading management settings, and those are basically the day's target gain and the day's target loss. Those are the limits that we want to trade under during that particular day. Then we're going to run those settings and look at the results we get. So the results will be in dollar terms, but we will also look at the actual transactions that have resulted in the outcome that is represented in the charts. So we'll actually look at the charts. And as a result of that, we will make refinements to the settings. So if the settings aren't as good as we'd like, we'll say, well, it doesn't work very well with a chart way. Maybe it will work well in a reversal way. Or that kind of decision, we'll start thinking about those type of things. But we'll make refinements. Then once we're happy with the settings, we will create a set file, and we will load that set file into all of those platforms that I was talking about in the previous video. Okay, so on your chart, you can see one of my testing computers. I have loaded 10 platforms on it, and they're trading away. As you can see there, they're trading away like crazy. And I have here in the corner a settings platform, and this is the one that I use to create the settings for these guys on the left. So we're going to be looking at this particular area. But just a little bit of addition to the previous video. One of the things you need to look at is how your computer is running. And how I do that is I go into the corner here, I right click, and then I go to Task Manager. And it would tell me how hard my computer is working. At the moment, I'm using 38% of the memory, and my CPU is at a very low level. So you've got to watch this. You don't want it to go over 60 in any of these cases. That means your computer is starting to strain. The other thing that I have loaded is a software that's free software called Core Temperature. You just activate that, and it will tell you the temperature of your CPU. And this is very important if you are using a slightly lower powered computer. You don't want these temperatures to go over 70 or or at over 70 degrees Celsius. So as you can say, I can see the one call has reached that maximum at some stage. But you generally want it to run nice and evenly at a steady temperature. If you start experiencing very high temperatures, that means you're straining the computer and you need to relieve some of the processes that are happening on the computer. So those are my two management tools that I use to make sure that the computer is not being strained. That was just an aside to give you a bit of a background. Okay, so what we're going to do, we're going to go and look at the first element that I mentioned earlier, and that is we're going to look at a chart to see if we can spot any price action consistencies or price action that we can start trading. So what I do is I'm going to open this settings platform, and there we have it. We've got this setting, and I'm going to actually choose the USD CAD as our currency, so I just change it like that. And I don't like this the standard black and green setup, so what I do is I normally go and I change the properties of the chart. I say no, let's start with a black on white. Let's have candles that are going down, call them red ones, and the ones going up, the bull candles, make them blue. And let's see what that looks like. We'll open it up. Yeah, that's starting to look more like a normal chart, isn't it? And what we'll do is we'll say the grid is a little bit strong. Let's make it something really a lot smoother. Okay, so that's how I like my charts to present, and maybe a little bit smaller. That's most probably it. I also want it to be slightly off the edge there, so I do it that way. Now this is how I like my chart. So what I do is I save this as a template. I'm going to save template, and I'm going to just call this candles. And okay, so now I've got a template, and I can actually see what's going on the chart, and we're now going to start looking for price action regularities, or the kind of price action that we want to trade. So the first thing that I normally look at a chart like this is I look for the long candles. Now a long candle is quite obvious because it's literally a long candle. Like those are two long candles, that's a small candle. So I say, all right, let's go and see when the long candles happen. So I use my cross here and I line up the candle, and I say, oh, that happened at 1300 hours and 1400 hours. So I make a note of that, 1300 hours, 1400 hours. So that's one group of long candles. There was a long candle there, 1700 hours. So I just make a note. So I'm trying to find a pattern in the times. There's a long candle that was 1500 hours. Okay, 15. So so we start looking a little bit more. There's most probably the start of a trend. That's 3 o'clock. Doesn't really help us there. 8 o'clock doesn't help us. Let's look. Oh, here's a big candle. When did that happen? 1500 hours. Okay, so we're starting to get a pattern that between 1300 and 1700 is the time to trade. Here's 1600. Let's see if we can find some more. There's another big candle. That one is 1500. Can you see the pattern that's developing? We already got 3 readings of 15. Let's have a look there. These aren't. Let's just move on. Find some better candles. There's one. 1500 hours. Can you see the pattern? So suddenly this particular currency is saying, hey, I move when it's around about 1500 hours. All right, that one was 7 o'clock, so I'm just going to make that 7 o'clock. It's an unusual time. That one's 1400 hours. Okay, so 1400 hours, and let's have a look. There's the start of another. That's 1300 hours. 1300. I've been writing these values down. 1300, 14. so on. There's 4 o'clock. We're not going to take that one. Oh, there's a nice big candle. Let's see when that started. 1400 and then 1500 with those two big candles over there. And let's have a look at this one. That was 1500. Can you see that already just by writing? I've got about 12 hours here. 15 appears 6 times or 5 times. 14 appears a number of times. 13 number of times. 17 a number of times. So what we're saying, somewhere between 1300 hours and 1700 hours, that is a good time to trade. 1300 to 1700 is a good time to trade. I'm doing this on a random basis, but you can do this with any currency you like. Simply go and look at when long candles occur. And that is specifically if you want to trade with a trend or a trending currency, because these long candles sometimes result in nice trends and that type of thing. So have a look at the charts, identify that. So already we've got a bit of information here. We're saying if you want to trade with a trend, 1300 to 1700 is a good time to trade. So that's one of the first elements to identify for a trading strategy. So what I'm going to do is I'm going to just drag the Make Money Day Trader onto this chart, and we're going to start building the signal, the settings. So at this point we know that we want to trade, so we're going to use the broker server timer because I'm going to use this broker, so that's fine. And we've identified that 1300 is a great time to start, and then 1700 is, or make it 1800 is actually the time to stop. So it's only those, that is when the best volatility happens, the best trending happens. So we have that element sorted out. So now what we're going to do is we're going to work our way through all of the settings and do it on a trading logic basis. So in other words, we're going to say, if I was trading this currency as a manual trader, what kind of settings would I use? Okay, and just a reminder that these are the default settings that the EA comes with, and let's go and have a look at it. Okay, so position sizing, I always use manual position sizing. It is so much more controllable, and that means I need to specify the lots. I'm going to actually specify quite high lots, one lot per trade, and the reason for that is we have a fairly big account. We are not going to open hundreds of trades because this is a day trading exercise. We are going to close the trades at the end of the day or at the end of the session or when it hits the stop or the target. So we're not going to have hundreds of trades open at the same time, and we can afford to have fairly high lots there. Then we go down, always want to trade long and short direction. There are other ways of eliminating buys when you don't want them and sells that you don't want. I'll go through those, but I always want to trade the longs and the shorts at the same time. And in this particular case, I want to trade in the trigger direction. Some currencies trade better in a reversal mode, but remember, we went and looked for the long candles. Now, the long candles are the high volatility candles that start a trend, and that's why I want to go in the same direction. So that's the motivation for that setting. So then we come down to the moving average settings. So let's think about this. I want to catch a trend as it happens. So I want to get into the trend as quickly as possible. So I want to use quick moving averages. And I'm just going to show you the difference between using quick moving averages and slower moving averages. So let's go to this chart, and I'm going to go to another chart. Okay, so here's an example of a chart that has quick moving averages. In other words, the blue is 4 and the purple is 7. Now what I like about these moving averages, can you see when it catches a trend, it really keeps the trend very well. Keeps the trend well, keeps it well. Look at those trends, and those are the kind of trends that we're trying to catch. So I want to get into the trend very quickly, and when I'm in the trend, I want to stay in the trend and get and when the trend reverses, I want to get out as quickly as possible. That's why I like fast moving averages. But you can also use slow moving average, and I'm going to just put a, let's say 55, good old Fibonacci number, and we'll put that in. And now this is a fast moving average together with a slow moving average. Now the advantage of this, and there are advantages, is that it will only trade in the direction of a trend when both are pointing in the same direction. Now the minute it stops trading that way, it will no longer trade, because the moving averages aren't pointing in the same direction. So it will only buy and it won't sell in that case. It will only buy and it won't sell. Only buy, won't sell. So there are advantages to using slow moving averages. But look at this, the disadvantage here. Look at this beautiful trend that wouldn't have happened. It would have only caught that part, and that part wouldn't have happened. Or maybe sort of late-ish there it would have caught it. So you missed that whole big trend there, and that's the part that I don't like. And for instance, that trend up there, the long one was pointing down. You would have missed most of that trend all the way up. So the disadvantage of using the slow and fast method is that you could miss out on trends, and the advantage of faster moving averages is that you'll always be facing the right way all the time. So I like the fast way. So let's go back to our settings. Now we didn't save those settings, so we might have to redo them. Let's just go back and see. No, there they are. Okay, they're fine. All right, so what I'm going to do here is I'm actually going to go for very fast settings. So fast is 3, and I want the second one also to be fast, and I'm going to make that 5. So those are super fast settings, and they will get me into the trend very quickly, and they'll get me out of the trend very quickly. Okay, so then the next thing is the ADX setting, and the ADX setting is mainly for swing trading. So I want to neutralize that ADX. In other words, I want to say let there be no influence of the ADX. So what I like doing is I like setting it very low for 5, and I try and make it as sensitive as possible. So what that means is that the ADX will always say, hey, the market's trending, and that's all I wanted to say. If I, for instance, set that for 30, then it would wait for the ADX indicator to reach a level of 30 before it says, okay, the market is trading. So I don't want the ADX to do anything, so I set it for 5 and 5. So as you notice, I'm just using my trading common sense and experience in creating these settings. Maximum trades don't matter because we are trading maybe 3 hours or 4 hours of the day, a very limited period that we're trading, and therefore we're not going to run up massive open trades. So I'm not even going to worry about changing that maximum spread. You can always put in what you want to be the maximum spread for your trading. In this case, I'll most probably put a 5, because the CAD for this broker is around about 1. So now the next really important settings are the initial stop and take profit settings. So there are the defaults in there. The CAD volatility is not that high all the time. So what I'm going to do, you firstly have to decide, do you want bigger stops than the targets, or do you want bigger targets and stops? So in my particular case, I'm going to say I want actually slightly bigger stops, because I want to give the transaction room to move, but I'll also have smaller targets. So the cash-ins will happen faster, and we're giving the price place to move for in terms of having slightly bigger stops. So that's one of the things I like doing. You can do the opposite. You can go for a 20 pip stop in it, but I like that. I like giving the price room to move. Trailing stops, I don't need to use the trailing stop for day trading. Position when the trend changes, I just say keep all the positions open. I don't want to close them when the trend changes. We're not using the zone, so that's out. All right, so now, and then this is the account equity, low equity high. We're not going to use that for now, but when day trading happens, that is an excellent one to set your trading parameters for your whole account. So because this deals with your whole account. But if you get the day trading targets right, those will take care of themselves. So the defaults here, so now we're into the day trading profit and the day trading loss. My overall goal is to get a 5% return on my money as quickly as possible, with the ability to never have a drawdown of more than 5%. So we want to manage the drawdown. So what I'm going to do, I'll start with the maximum loss. The maximum loss I want to set for 100. And why that? Because 5% drawdown on $10,000 is $500. So I want to give myself 5 losses before I reach that maximum drawdown. So I'm going to set my maximum loss for 100. So if I do that, I'll also want to make a bigger target. So there's the risk. You're risking 100, but you want to have a big target. Now 300 is a little bit too big, I would say, and 200 might be too small. So I'm going to just go in between, and I'm going to go for 250. So in other words, on losing days, I'm going to make 100 loss, and on winning days, I'm going to make 250. That means I can lose quite a lot of days, and only one winning day will make up for quite a few losses. So again, I'm using my trading experience and just trading logic to determine these items. So let's have a look. We want to, when there's a close down, we want to allow re-entry. Now, re-entry doesn't happen immediately. It just means on the next day, during the next, do you want me to re-enter? And I say, yes, I want to re-enter. Then there's a setting, delay after the trading window has been completed. In other words, if there's naught in there, what will happen is that when the 1800 hour is reached, trading will stop, and the result will be, and all trades will be closed, and that would be the result. But if you want to keep it slightly open after that period, you can do that. I normally put about 30 minutes afterwards. 0 is also quite fine, but I'm just going to put 30 in for now. Closure after time of day entry. So when that period has expired, I'll say close all entries and allow re-entry on the next day. So it will, when that period is expired, and then it looks there and it says, oh no, another 30 minutes, it will close all the entries and allow re-entry later on. I'm using the broker's time, which is the safest, because I'm going to be using this broker to trade, and those are the time. And also when you set that, what you see on the charts is what the broker time is. So that's another, and we've already determined we want to trade from 13 to 1800. Okay, so those are the settings, and as you've seen, I've just done them on the basis what I think would be reasonable if I was trading manually. If I was trading manually, I'd go for a take profit and a stop of that. I would probably use very fast moving averages. So this is where I say you don't need to optimize to get the best settings. You can just use your trading logic, and this is basically what I have done. So now we don't know if this is profitable or not, but what we'll do now is we'll save these settings as a set file. So we go save, and there's nothing there. This is the first one. So we're going to say manual settings 1. As you can see, it's almost guessing, but it's educated guesses, because I am motivating each guess with a reason why I'm going that way. So I say save. So we've got these settings saved. Now, how do we test these settings? How do we know that these are settings we can use? One of the best tests to do is that, what if we used these testings last week? That's the one test. The other test you can do is just take these settings and trade them for a week forward. Now, what I like doing is I like doing both. I like first testing them for last week, and then if that is sufficient, then I test them for the next week. So let's go and do that. And we have saved this set file. So what we do is we go to, and then I'm going to view the strategy tester. So the strategy tester allows you to do exactly what I've just said. It allows you to test your settings for the last week or the last 2 weeks or the last month or so. And we're not talking about optimization. What results would you have got if we had traded the settings that we've just come up with over the last week? So I've loaded the EA, we've got the CAD. I'm using every tick because that's the most accurate way of testing. We're using the 15-minute because that is the one we've decided to trade, and we're using a spread of 1, which is reasonable for the CAD. And then let's have a look at the settings. Okay, so we open the settings by clicking on Expert Properties, click on that, and what will happen is that in most cases it will load the default settings that we have come with the EA. So we want to load the settings that we've come up with. So what we do is we go load, and those settings are actually in the presets. So we have to go, we click on the platform reference, we click on MQL4, and then we click on presets, because those are the presets that we saved earlier. We click on that, and there are our manual settings. So we click on that, and we then say open. And let's have a look. Okay, it has brought through those settings that we had decided earlier. So there's the 1, the 3 and the 5, the 30 and the 20, the 250. So everything has been brought forward into the value column. So if we now say OK, and we run this, so we run this, and we say we want to test the previous week. So what we do is we say use this date, and it is the 16th today, so I'm running it from the 16th, and we let's just click on that, show you. So we're running it for 1, 2, 3, 4, 5, 6 days, but it won't run on the 16th because that's today, so it will run for 5 days. So we're going to just say what happens if we ran those settings over the last 5 days. And I think everything's ready to go. So I'm just going to say start. And it's going to go away and run those settings. And then what we can do then is look at the results. So we just go to report. And there are the results. And oh, thank goodness, look at it. It is nicely positive. So that random method of finding settings has actually worked. And let's have a look. The drawdown is low. The absolute drawdown is low. So I am pretty happy about the results that we have come up with. These are really good results. So those results can be used for forward testing. So we can test them onto one of those 10 platforms that we've opened, and we can use that set file that we've created to test into the following week. But let's just have a look. Let's say this was not positive. Let's say it was negative. So what are we going to do if this was negative? So we go back into settings. We click on the expert properties, and there are a couple of areas that might cause it to be negative. So the biggest area is this one, the initial stop and initial target. The other area, the sensitive area, is if your targets are too big or too small, and your stops are too big or too small, or the time of day. Those are the main areas. The other area that could be a problem is this one, but that's very seldom the problem. We'll come back to this one once we've looked at some of the other alternatives. So what I'm going to do is I'm going to say, look, when we did this time of day, there were mostly from 1500 to 1700. That's where the bulk of the results were that produced long candles. Maybe we've started too early. So what I'm going to do is I'm just going to change this to 1400. So I've made one change to our settings. I say OK, and then I'll just run it again. And we look, oh, it's positive, but it's gone the wrong way. So maybe that change will not work. But if you again look at the settings, the bulk of the settings were actually between 1500 and 1700. So I'm just going to go even more. I'm going to go to 1500. Or 1500 hours. So we say okay, let's run it again. So we just run it. So in other words, you can see I'm not optimizing, I'm playing around with the settings. I'm just fooling around and seeing if we can come up with better settings. So we look at the report. Oh my goodness, look at this jump. So by trading fewer hours, in other words, from 1500 to 1800, we are actually making a bigger profit. And that makes sense if you look at the charts. The real trends, most probably on balance, are created at the hour of 1500. So we've now made a change here. And that's what you do with the initial stop and initial target. You change them around. You say, what if the stops are bigger than the targets, or what if the targets are bigger than the stops? So you fool around until you get a better profit figure. Or you could even come here and say, what if we make this even smaller or even bigger, and that even smaller and even bigger? So there are very few areas that you need to fool around, as I call it, to get a better. But certainly that 15 to 18 is a much bigger number, and I'm not going to even look any further. I'm just going to put that into our set file. So we go back to our page that we were looking at, and we go in there, and we go into properties, and we have a look here, and we go save, and those are the manual settings. So those were the original manual settings. So what we're going to do is we're going to save that as adjusted manual settings, and today is the 18th of September, the 16th of September, and that this is for the USD CAD, 15 minutes. All right, so we know more or less what the name of this is. We save this, and now we can close our testing EA. So we go say okay, we go. Before we do that, let me just save that setting. So we go like that. We go in and we say that one I want to save it. So I'll copy it, and I say cancel, close, and I can now close this one. So this has been our testing platform, and we've reached where we want to be. We've reached a point where we have a set file that we want to forward test. What I've done is I've opened a new platform called, that's IG10. I've opened a new platform called IG11, and it has the make money running on it. And what I now do is I right click properties and I make sure that's clicked. I go into inputs and then I say load, and there will be nothing there, but what I then do is I paste that set file that I had finalized in the test platform. I paste there, so I say open, and you'll see that the settings from that set file have come across. There's the 3.5, the 30, and the times 15. So that's how you, and now this one is set up to trade. All I need to do is click auto trading, and then in fact I'm going to do that. There's no harm in doing that, and I'm going to align this into that group. Just put the trading so we can see that, and there we are. So we now have that. On the whole, not too bad. Okay, so that now, so what I've shown you here is the full process of finding settings to trade using a manual trading approach, an approach used on sound trading principles. And I've shown you how to find better settings and then to backtest those settings based on the previous week's trading, and then save that as a set file which you can then use to trade the next week. So what we're going to be doing with IG11 is trading that set file for the 15-minute CAD into the future week. So let's have a look at the process, and we have looked at the charts for repeating price action. We've identified the times when the price action will take place. We've created settings that take that information into account, and also the proposed strategy that we're going to be trading. We've created day trading management settings by setting day targets for losses and for profits. We've seen the results. We've seen the results and view the strategies on charts. Now, we haven't done that, and I'll just show you how to do that. We've made refinements, which I've shown you, and then we've created a set file for forward testing. So let me go and show you how to view the strategy in action. And to do that, we're going to open this one up. Here, the strategy is here, and what we're going to do is we're going to just run it again to make sure we've got the right strategy. Should get about $700. $700. Okay, so now to view it in action, we are going to click on visual mode and just move that a little bit away, and then we start. Now, so visual mode will show us the trading in action, and there it is. And what we're going to do is we're going to just move it a little bit faster, and this is the 15-minute CAD. It's approaching that trading period that we've set for it, so you can see it trading. I'm just going to remove the grid. All right, there we are. It's trading. Oh, it's hit the profit. So that's a good result for the first day. Let's have a look at what's going on. Okay, so it's approaching the trading zone for the next one, and there it goes, and it reaches the loss. Now, I'm just going to stop it at that. Now, what this is telling me is that our lot sizing, position sizing, is too big. The one that I entered into the settings is too big, and it needs to be reduced because we are hitting our losses too quickly and we are hitting our profits too quickly. So what we need to do actually is to reduce the size of the lots that we are using. That will give the transactions more room to run. But let's continue with this just to show you the final. I'm not going to do this now, but certainly I'll go through the same process as we did before. So what I'm going to say is, look, one lot appears to be too big, so I'm going to change the lot sizing maybe to 0.08 or 0.6. You see, there we are. It's hitting those targets too quickly, and I just think it needs more room. I might be wrong, but I will start playing around with the lot sizing to see if that will either improve the results or not. But these results, from my experience, appear to be happening too quickly. See, there we are. We're hitting the targets a little bit too quickly. So that's how you visually see your proposed settings on the charts, and where you can see things that might not be as you want them to be. There we are. See, the loss was actually hit after 2 transactions, and that's too fast. It's not giving the transactions room. But if you consider that the overall results are pretty good, maybe that's the way it should be trading. But I certainly will investigate different lot sizing. That lot sizing is one of the most tricky settings to get right. So there we are. This must probably be the last day of trading. Let's see it. Boop, boop, and there it hits the profit. Certainly it looks like we've identified a price action that happens fairly regularly, not at 100% rate, but fairly regularly every day. And you can see how the EA is trading automatically using exactly the same settings every day to cash in on that price action. There we are. So the loss was hit very quickly, and that's the part that I don't like. It's way too quick. It needs to have more space. So it's a good thing I remembered that part. Now, I hope I've given you some really good ideas about how to find settings using a more manual approach to finding settings. You can see we did no optimization at all. We did test alternative settings, and only in a select way. So this is certainly possibly a better approach for somebody who has some trading experience to find day trading setting. As I mentioned before, we will be presenting this training in a training course that will be structured in the paid forum in the next week or so. So from me, Alex Deploy, cheerio.